See, the problem is that you're right there. There's a perfectly good island somewhere. We'll ride the boat, so don't grab your coat. You won't need it where we are going. Get away. Let all things from it takes away. It'll give me down, Lord. Sorry, should have not been all that the sun. But you gotta get away to where the boat is from. Pick me up. Pick me up. Pick me up. Put me down. Down in the sandwich, put me down. And when I fall on my feet, put me down. I'll just leave there till the morning comes round. The sunshine and ladies and pina coladas and harmonious songs that are playing. There's a song in my ear that I want you to hear. Soft tropical lips that are singing. Get away, get a book these from it takes away. A look at me down long, she can worry, she can drop them in the ocean. But you gotta get away to where the boat is from. So get away to where the boat is from. It takes away a look at big problems. You can worry, you can drop them in the blue ocean. But you gotta get away to where so get away to where the boat is from. It takes away a look at big problems. You can worry, you can drop them in the blue ocean. But you gotta get away to where the police from. Pick me up. Put me down. Put me down. I gotta go. Pick me up.
Good morning, everybody. We'll get started here in just a few minutes. I got a couple of more adjustments.
Land of the vines, and never mind where in North Carolina. Staring up the road, and pray to God I see headlights. Made it down the coast in 17 hours, picking me a bouquet of dog. Laughing out over my face, I can see my face in the night. Burning wings and I was give it learn old time string band. Baby, please a guitar. I'll pick a banjo now. Nice you just keep on getting me down. Focus on the town. I'm turning back to living that no more. So you love no matter about me. Yeah, sound down, shitty, baby.
All right. There we go. We got about 3 minutes before we get started. Take a moment, look over news, economic reports, and kind of our pre-market tips. We'll talk about that once we get everything live and going.
Planes and ambulance from the colony to Johnson City, Tennessee. Beautiful sun. I hear my baby calling my name. I know that she's the only one who's been I leave that will die with a dream.
Well, good morning, everybody. Let me get a couple things organized over here. Got a lot going on, well, not only in the market, but also taking care of things around my place here. All right, let's see. Before we get too far down the road here, I do want to bring up if you have not gotten a prop account to start practicing in and to pass the evaluation, highly recommend that you look at that as a way of, especially in these market conditions, get yourself certified, get a second stream of income here. So I'd like to thank everybody for joining me today. And just a quick reminder, when you go on to Elite Trader Funding today, that the 4th of July promos are still going on, and there's a lot of things happening in here where you can get some discounts. I also remind you of our 4th of July promos to get involved with the 47% off your first on our top programs, but it ends July 11th, so don't miss it. Also, heads up, I'll be on the road Thursday and Friday. So today, after the Mastering the Charts recap and review, we will get underway. Let's see. If we have some promo codes, we'll be putting them in the live stream on YouTube. So be watching for some of those for Elite Trader Funding and getting a eval account so that you can get yourself funded, taken to the next level. All right, let's get started and jump right in. Markets are going to be a little volatile today. Okay. Let me jump out here and look at some pictures. We're already seeing nat gas getting a pretty strong move to the downside. There is news and pending information coming out. I'm trying to monitor what's going on. We do have the tariff things that are coming out. Let's just talk about that for a moment. July 9th, tariff deadline and more announcements. Also letters going out trying to encourage people to come to the table. Most of the countries know that the tariff deadlines and things like that, or just to get them to the negotiating table. So when that happens, they make an announcement and the markets react from that. Okay. They also react, what we've seen, they've been reacting a little more on the negative side when just a blanket announcement comes out. Okay. I'm getting some pretty big whipsaw actions. Okay. Uh, when I started pre-market, NASDAQ, S&P, Russell were currently inside days. I think they have broken. We'll check that in just a moment. The Dow was an outside day. Okay. Now, inside days and outside days are something that we prepare for. If it's an inside day, then we anticipate a gap fill more often. Okay. And we don't take breakout trades on an inside day. We tend to wait for price to come into a demand zone or a supply zone for a higher probability trading environment. Okay, so I want to set the tone for that today. Other things, we have crude oil. We got an EIA report due out a little bit later. There are some conflicting things. Short term, week to week, we're seeing, and month to month, we're seeing increase of production, increase of more barrels on the market. That all sometimes will drive the price down short term. Okay. But on the bigger picture, our oil reserves, our strategic reserves, and things like that around the world, okay, are, I think the last report I saw about 11% uh, below. Okay. So there's still rebuilding a lot of the strategic reserves and filling them back up, but they're not going to fill them up until they get a good price for it. So a lot of volatility, a lot of action around the crude oil. And with the crude oil report, we need to document and measure those things. We'll come out and I also noticed in the pre-market, heating oil and crude oil, okay, we notice that they tend to run together, okay, and heating oil runs a little bit in front of crude oil. We use it as a lead indicator. This morning, I noticed that crude oil and heating oil were not doing the same thing, and I just kind of wanted to point that out. Okay. We monitor a lot of things in our pre-market tips to help us see what is a normal, easy trading environment. We make those associations. When things stop correlating, it kind of raises a red flag, and we need to take a moment or two to look at, what's the difference? Does it provide a trade or does it provide a trading environment that we kind of back off? Okay. All right. Let's see. Yeah, we got crude oil. Let's take crude oil, the open range breakout. We do have heating oil moving down. Now crude oil is also moving a little bit lower. I'm going to step out of this one.
Order filled.
There we go. And we have no positions right now. Okay. Gold also getting pretty strong pullback. We got a nice little level of resistance back above. We got a supply zone at 33.31 area. And we have a demand zone that we're looking at anywhere from the 32.83 down to 32.69. More so right in the middle there, 32.81, 32.76. So as we're watching these markets play out, we'll look for an opportunity to be going long on gold around this range. And I do want to prepare everybody that if you have been seeing the Mastering the Charts, oh, sorry, in our Mastering the Charts recap and review today, I am going to be diving a little deeper into what we're using as the ICT concepts and also fair value, more so on the fair value gaps. And that's what I have marked with the blue dotted lines on there. In blue, fair value gaps inside of our leg base group of candles. Okay. And it's one of the studies that I've been doing and watching, and we've seen some great results off of this. Um, now it's time to verify the information as we move closer to the application of executing on trades. Okay. One of the things that I've noticed in my in documentation and putting these things together is that, we see a pattern, we see a shape, we see something that's on the price chart that we kind of looks interesting. Okay. Then we start documenting and verifying it. Okay. And we start looking for picture perfect past trade setups, examples to give us a little more clues around that particular pattern that you're looking at. Okay. Once you verify it, then you have to kind of watch it play out. Okay. Verify that, hey, what your research did is actually working. Okay. Um, and then you start moving closer and closer to the application. Okay. Now, I've watched several of these trades, one trade, especially on the S&P, that came right down. I mean, we had a zone yesterday right there, and price came into it in the overnight, and I hesitated. I didn't take the trade, okay? Even though it was very low risk, I just didn't take it, which, and I'm hindsight, why didn't I take it? It was a 50-point move on the S&P. Amazing, okay? But you know, it takes time to see these pictures, verify the pictures, and then watching them play out. It takes about 50 times of watching them play out before you'll start to apply a trade, okay? So don't be too hard on yourself if you miss a few of them while you're learning and learning to trust the picture that and the research that you're doing. Looking at the Dow 30 stocks, we have very, very light volume. Okay. I mean, this is really light. Cisco, Procter Gamble, even NVIDIA is very light volume. Okay. Everybody's braced, it seems, for news. There's not much economic reports coming out today. We've got wholesale inventories and we've got the FOMC minutes. Now, we do have a bond auction in the middle and a note auction, a 10-year note, which is a big one, about 1:30 in the afternoon, okay, Eastern time, just prior to the FOMC minutes. Now, tomorrow we do have about 3 or 4 Fed chairmen speaking uh, throughout that, and a very light day of economic reports on Friday. Next week does start. Okay, today's session expected higher volatility awaiting tariff impacts and announcements. Indexes have been consolidating for 2 to 3 days, can lead to an impulse wave. Because we have low volatility leads to high volatility. Corrections lead to impulse, or impulse lead to corrections. Okay. So when we take a look back at the equity indexes over the last, let's just use the exchange traded funds. Okay. We can see that we've been in more of the narrower range. Okay. Now, this morning in the pre-market, the exchange traded funds are, if they break or gap above, end up gapping above, these will be what we call breakaway gaps. Now, breakaway gaps often like to retrace back down into the gap range before proceeding in the direction of the trend. The equity indexes have just started to break out of the prior session's range, S&P, but we're still kind of leaning towards a gap fill, okay, the 5 p.m. close. NASDAQ still inside the prior session's range. So if at the session open, we see that the markets are still inside the prior session's range, we often lean towards that gap fill, okay? And then that would be the place where we're looking for price to pull back. On the NQ, it would be about 22,896 to 22,884, okay? The trend on the higher time frame is still to the upside. Okay, we have seen the golden cross on the NQ. I think we're approaching that on the S&P. Yep, right there, right at the bottom on the daily chart. We're seeing that the golden cross is happening. Now, historically, when that golden cross happens, we do see a pullback in the marketplace. Okay. Now, it may take a little bit of time for that to happen, or especially on a daily chart. But when we see the daily charts pulling back from that golden cross, we want to be prepared for a much longer term uptrend. Okay, we got a lot of things coming out throughout this week and the beginning of next week. July 14th is a big day for crypto markets as far as regulation and banking and things like that. Okay, so we'll pay a little more attention to trading some Bitcoin futures as well. So far, we're not seeing a lot of Trump tweets out there, so uh, be prepared. Dow also looking for a price to come back down, fill the gap. We are an outside day on the Dow. Okay, outside days, you can look at breakout trades. We do still have some unfilled opening gaps on a few of these equity indexes. Russell has the biggest move to catch up to the rest of them. Russell is still an inside day. If price opens there in the next 15 minutes, we're going to have a higher probability that we will look to fill the gap. Okay. Yeah, just I mean, looking at the S&P yesterday, what a brutal market. Just when you think things are going, I mean, it just chop, chop, chop. Okay. Now, a couple of days of this sideways tight range, okay, often leads to an impulse move. Okay. So take a moment and mark your resistance and mark your support areas. It is possible that we continue to trade in this range. Okay. This is not an easy trading environment here unless you're really good at picking bottoms and picking tops and you're just pretty nimble. Now, on inside days, they can be choppy, more designed to take your money. The trades that often have a better result or take them a little bit later in the session, around 10:30, 11 a.m. Eastern time. Hey, good morning, Chris. Our large market cap weighted stocks, Nvidia is up. Looks like it's starting to make a new high. Microsoft back up at the all-time highs. And Broadcom is being kind of quiet. Some news out there on Apple. I think they're going to start to feel their tariff impacts a little differently than some of the other ones. So Apple is a large market cap weighted stock. Apple and Nvidia have a tendency to be bigger market. Well, they're two largest market cap weighted stocks, so they have a good impact. When they're both going the same direction, it has a high probability the indexes will follow. Now, Microsoft and Apple, okay, Microsoft is really close or has surpassed Apple's market cap, okay? So I'll verify some of that information and then possibly next week we'll be switching to NVIDIA and Microsoft, okay, for that lead indication. Remember, S&P, NASDAQ, and the Russell are market capitalization weighted indexes, and the larger market cap stocks move the index more than the smaller market caps, okay? So we'll use Microsoft and NVIDIA if I can, once I verify the information that Microsoft has a larger market cap than Apple at this time. They're really close right now, okay? So, all right. We had a spectacular move on copper yesterday off of some tariff information. Now, a lot of times these get retraced back down. Okay. So I'm going to take we got the September contract, which is a U contract, HCU 25. Okay. Now there is a micro. Okay. Remember the regular contract pays $12.50 per tick. Okay. $12.50 per tick. So it's a pretty big mover. So I have an entry that I'm going to look for. I also want to remind you that with the volatility that we saw and are seeing right now, notice the spread between the bid and the ask. Okay. So when you're looking to participate in this, look to use limit orders. If you're going to hit the market order, you're going to probably see some slippage. Okay. So this is going to be a big one. If this is too big of risk for you, look to trade the micro. Okay. Actually, let's just do that. So the micro contract is MHG September, letter U and 25. Okay. All right. So I'm going to place a limit order. I'm just going to take a half a position, which is 5 micros. And I'm going to look at entering about that 5.6365. Wow, cattle hit all-time high yesterday. Interesting. And we're still seeing soybean meal really kind of quiet. All right, 365, we're going to sell short. And I'll have a protective stop up at 7170. All right, so throughout our session, if you're watching us on the live stream, we will be giving away 3 eval accounts. You guys know how much those are? Are they 50 or 100,000? We'll have some questions or a quiz for you. Okay. All right. So first trade that I'm setting up right now is copper. Okay. And I'm looking for copper to come back up into the fair value gap area. And we're going to look for a trade opportunity in there. Now, my initial stop is going to be at the distal line. Okay. Entry 5.6365. Stop loss 5.7170. Oh, those are nice. Okay, so we do have 3 $50,000 eval accounts where you only need to make $2,000 on the account over a short period of time. And once you have passed that eval, you move right into the simulated funded account, which you get paid on. Okay. So if these market conditions are causing your account to fluctuate more than you want, then consider using the prop trading to kind of refine your skills and also take some pressure off you. You know, often trading family money has additional psychology and pressures to you. Okay. All right. Russell, we're still adjusting. Russell is now an outside day. Dow, oh, sorry, yeah, Dow. Dow's an outside day. We do have a lot of resistance areas right here. But these resistance areas are after a strong drop in price, and we do have some pockets of points as price starts moving back up through that area, okay? With the drop and the base, we could be looking still for another impulse move to the downside, okay? So be prepared. I know things are they are looking pretty bullish for the marketplace, okay? But be prepared with the pattern here, a little fake out, breakout, and then price coming back down. Now, that could be done on some speculation around the tariffs, okay? Now, the income the U.S. will generate off those tariffs will be pretty significant, and they're already starting to see the impact that our money is just not being taken away now. You know, I watch how the media talks about the tariffs and putting those things together, you know, and it's almost like they're being angry about it. But the anger should be at the price gouging we have been seeing through other folks, okay, other countries. They've been gouging us for a while. So you play it how you see it, okay? I see this as, hey, you know what? They're no longer taking all of that money from us. That's more money in our account, so to speak. Okay. So I think the Fed holding out this long as we've seen some pretty solid numbers come out um, is kind of going to be, I don't know, I think they're kind of making a mistake waiting so long, but maybe there'll be a big cut instead of just a bunch of little micro ones. Okay. Now, the FOMC minutes are due out later today. Okay, and with those FOMC minutes being released, um, there may be a little more clarity. So imagine this, a little more clarity on September rate cuts. So prior to that, with all the tweets and things like that, maybe we get an end of tariff stuff. Maybe we get a pullback in the market, and then around the FOMC minutes being released, we see that opportunity to go long because the markets are now going to start pricing in those rate cuts. And maybe they'll price in bigger ones. Okay. Still a lot of pending news on so many of these things. All right, let's come back to nat gas. I don't have an entry on that. Crude oil. Wow, nice play if you took the open range breakout. Crude oil, Globex range is about it's about 1/3. Okay, I mean we're in that range. We're kind of right in the middle. Okay, let's see. Yeah, we are seeing price pulling back on the larger time frame, right into a rally-based rally. We have an area 67.57, 67.47, where we have a fair value gap right below. We'll look for a bounce off of that once we start seeing heating oil come. Okay. We do have an active trade on copper, and I am also going to place an active trade on gold. Okay. I'm using a simulator while I do presentations. Okay. So make sure that you're sizing the position based off of your trading plan. Okay. And what your risk is on your trade. So 32.81, I'm going to go 32.82. And what I'm starting to notice is that with the fair value gaps inside of a leg base is I've noticed that the set and forget trades they're pretty compelling. Okay. All right, that order is set to go long, 32.82 on gold. Keep in mind what the daily chart looks like on Bitcoin. Okay, we have a beautiful textbook bull flag potential. Okay, now with the bull flag, the structure, we often see a 127 or 1618 extension from that for the next for projection. So 127, 1618. That puts us pretty high up there, 123, 700 and 136, 600 area. Okay. So when you study a lot of these price patterns, bull flags, bear flags, you start getting comfortable using Fibonacci price extensions. And when you have a very specific textbook type uh, chart pattern, there's a lot of measurements that go around that. Okay. So it's often a 127, 1618 extension. And if everything plays out, that could be a significant increase on uh, the Bitcoin. Okay. All right. Are you hooked on trading copper now, Chris? You had a great trade yesterday. Now it's got your attention. Platinum also has it's within a channel in a range. Okay. And we've had that kind of behavior before. A lot of attention on the metals markets. With silver and gold just kind of hanging out. Okay, I think they're waiting for some news on the the crypto market before they start repricing silver and repricing gold. All right, so crude oil getting a nice little pullback off of that. We just look at that. Darn it, market's open. I mean, again, I miss a lot of these right now because of my just recent study, but we're seeing when you find those fair value gaps, and there's another one, Canadian dollar just hit it. So I'm just spending the time, the ones I don't get, I'm just going, I kind of beat myself up like I just started to. And I got to go, wait a minute. You don't trust it yet, so don't just start putting your money on it point blank. Okay. Now, I am seeing a lot of this on the fair value gap areas that there is a significant, almost like a 1-to-1, 2-to-1 type trades. If that fair value gap is inside of a leg base group of candles, the trend tends to manifest even more. Okay, a stronger trend that develops. If it is not inside a leg base that you have found, then just look for a short-term trade, 1-to-1, 2-to-1, as you're starting to evaluate that technique. Oh my gosh, look at the indexes. Just we did have some sell orders, market open order imbalances. We had a lot of sell on the Mag 7, but a lot of buying on the S&P. Citigroup, Goldman Sachs, Lilly, JP Morgan, Bank, and Boeing. Okay. But we're not seeing any more. More tweets. Wow. Blast off. Okay, we do have an unfilled gap on the S&P. Unfilled opening gap up above. Outside day on the S&P, NASDAQ. Ooh, there we go. All right, we got to test it out. NASDAQ got 2328. Get that one set up. Kind of setting it out there ahead of time. Now, this is just a short-term pullback, okay? Not looking for a trend change at this point. We do have an unfilled opening gap up above, which may be one of the targets it goes for, okay? Okay, I'm going to place a trade on that. Also over here, 2328.
Order filled. Order filled.
And coming back in, placing a protective stop loss. Let's drop down to a smaller time frame, see if there was any place. Yeah, it looks like yeah, must have been a tweet come out. No?
Stop filled.
All right, let me get my stop loss in place here.
Stop filled.
All right, seems like my charts are slowing down just a little bit. Okay, got my stop in place, got about $140 worth of risk on the trade. And had a request on the Canadian dollar trade. Let's pull that back up. Yeah, you have to go down to a smaller time frame to find out the zone that I have for marked. Okay.
Order filled.
If you need me to slow down on that one, let me know, Chris. Yeah, I got stopped out on the NASDAQ, but I'm still kind of anticipating the price will come through that. I just don't have another entry yet. Yeah, no other signals yet. But what's interesting about that price movement up, if you look over at the tick Q, it never went into a buy program. So the impression is that was just a light volume short squeeze. Okay. And short squeeze can have some pretty big impact on price. Okay. But the fact that we did not see the stocks react to that, okay, there's a likely move that we can get price can get retraced off of that. Okay. But we are approaching all-time highs. Let's see that. Any more tweets out there? Okay. Nothing on crude oil, not gas. Okay, so breakaway gap on looks like each one of the equity indexes. Okay, so at some point in time, we're going to be looking for that pullback into that gap range for an opportunity to uh, again re-engage in a long. So I am going to be a little more patient here and wait for and we see this a lot with the breakaway gap is they often like to be retraced back into that area. Okay, so there's going to be more opportunity as the day unfolds, and we just have to wait for the pullback into demand to see if it is real demand here. Okay, and not just a squeeze. Still waiting on copper and gold for entries. Those trades are out there. Wow, they are putting the hurting on everybody out there, aren't they? Let's go back. Okay, looks like Broadcom decided to join in. Meta, big upside. Amazon. Okay, 5 minutes. And looks like the Dow has gotten up into its area there. Yeah, it's kind of looking around. I mean, I don't have a place to go long, but I'm gonna go check out the Dow and see where we're at on the bigger time frame. Yeah, we're right into that middle of the pocket of points. There is a fair value gap in that range. We're just shy of that. 44,813. Internals. A little bit of a buy program on the tick. Advancing issues are stronger than declining issues, and the VIX is trading lower by 80 cents. Okay. Large market cap weighted stocks. Whoa. Oh my gosh. That's a crazy move on at the all-time highs. New all-time high on Nvidia. New all-time high on Microsoft. Notice Apple's not participating. And it looks like we got a new all-time high on Broadcom, just slightly. Okay. Wow. It's not doing much for gold. NQ making another sprint to the upside. Oof. Got the unfilled opening gap. Came into a leg base that we've seen before. There is no fair value gap in that one. Okay. So it's just a leg base. Good morning, Callie. Yeah, we had a little larger time. We had leg base zone on crude oil. Wow, Nvidia, just breaking news, become the first 4 trillion market cap. Whew. Wow. Maybe Nvidia can pay off the US debt here not too long. Well, no stopping on NASDAQ for sure. The volume is getting quite thin up here. Broadcom moving, yeah. Okay, Russell approaching the unfilled opening gap. Wow, just barely ticked off of it. Let's do a couple of Fibonacci price extensions for this move. Approaching 23,095 as a 314 extension. Got an overlap, 2395, 102. All right, so using some Fibonacci price extensions, we'll be looking for an opportunity, a counter trend trade, kind of watching the time as well, between 23.95 and 23.107. So I'm going to set that order up. I'm being a little aggressive on this, very aggressive. And I'll take a stop loss at 23,108. See if we get a little pop on that one. And nothing done on crude oil. Nothing on copper. Now it's kind of like that deer in a headlight thing. What the heck do I do with all of this? S&P back up at resistance area near the all-time highs. Let's go check that. Thank you for posting that, Miss Chris. Yeah, I might have to go out to the daily chart as we're seeing the
Order filled.
Order filled.
oh, we do have one there. Okay, so to answer your question about the natural gas daily chart, I do have a fair value gap down at a 2.899, 2.842 on nat gas. Okay, the smaller time frames, I don't have enough data going back that far. Okay. Oh, maybe I do 3.118, 3.095. Yeah, that puts us right about that same area. All right, we did get a little shot on that. Let's make sure we have our stop loss. Input stop loss, I got $130 worth of risk. You get a nice opportunity to see how Fibonacci price extensions. A really aggressive entry as we are looking for price to come down and find some buyers. Okay. See if we get anybody else that wants to take a profit. And we'll use those fair value gap areas as our targets. The NQ got a nice break of that resistance. I think we talked about this. Session expect high volatility awaiting for tariff impacts. Indexes consolidated for 2 to 3 days can lead to an impulse price move. We had it all out there. Okay. That was a nice impulse. It didn't give us a good entry. What else do we have going on out there? I can kind of think that the indexes have stolen the spotlight. We got a nice bounce off the 30-year, started yesterday, also with the 5 and the 10-year. Let's take a quick look out at the dollar pull back a little bit, back down to support. And we're also seeing that the 10-year and the 2-year yield have also pulled back a little bit. Okay. Wow, these markets just went nutso to the upside. Alphabet, even on the 5-minute charts, we don't even have a 5-minute red candle. So extremely high risk up here. If you did take the trade short, make sure that you're protecting your capital by having a stop loss in place. Tesla not participating in that, nor is Apple. And we have a first economic report coming out at 10 a.m. Wholesale inventories. Let's see if that has an impact. Our target range for this aggressive short trade on the NQ is at 22,983 level. The stop loss up here at the 23,106, 108. And we're about 3 minutes from the top of the hour and that economic report. S&P still has an unfilled opening gap. Of course, we see a ballistic move on Nvidia, nothing on Apple. Wow, look at that volume. It's still very, very light on the stocks. Okay, so let's take an assessment of the cash value and compare it to whether futures are overbought or oversold. I have one Dow stock negative over 94 cents and 14 positive. That leaves me with 13 net. 13 times 2 is 26. Cash equals 26, while S&P futures are trading at 37. So S&P futures, um, about 10 points overbought relative to the cash market. okay? We're going to look for some of that to settle out before they resume trend, okay? Get a good picture of that. Okay, so 2 minutes to the economic report coming out. Broadcom pulling back a little bit. Amazon, yeah, it looks like they're going to be taking some profits. I wouldn't anticipate too much profit taking on Microsoft, Nvidia. Um, we might get a little pullback, but stocks making all-time highs generally continue to make highs, okay, until we start building an accumulation of sell orders. Yeah, the Trump tweets are poking at Powell right now with you know, the too late coming out. All right. Now, if you're going to hold through the economic report, okay, be prepared with your protective stop loss. Okay. Yep. So you've got a little whipsaw up. Yeah, it looks like you're going to run it. It's messing with us.
Order
Yeah,
filled.
got stop. Yeah, crazy conditions in the market right now. Not making it easy to go long, and definitely getting aggressive to go short is going to be, as you see, you get stopped out. Gonna need some time now for the markets to settle down a little bit, form more accumulation of fresh accumulation of orders, kind of let us know what we need. But we do have on our exchange traded funds, the breakaway gap does imply that we will get a pullback into the gap area. Okay. Knowing the different types of gaps out there, the three main ones, a breakaway, a runaway, and an exhaustion gap. Okay. Now, breakaway gaps often retrace back. Runaway gaps, they continue to move in the direction. Okay. And usually a runaway gap is after a period of consolidation, price tend to gap and run. Okay. And then exhaustion gaps are when price is gapping up in the direction of the trend, often getting closer to a potential turn. Okay. Wow, they are putting a hurting on these squeezing these markets. S&P still hasn't broken the high. Now, if you're new to using fair value gaps, when you have a strong run up like this, in order to, you keep a close eye on those fair value gaps that have formed. Remember, it's a three candle pattern. Okay. And once you start breaking through those fair value gap areas, you will start to anticipate that potential price turn. Yeah, it looks like nat gas is gonna continue to go lower, but I don't have a zone. I'd have to just take it as a breakout trade. And right now we're down 4.4% on the nat gas on the session. Taking breakout trades could be a little more elevated risk at this point. Okay. Waiting for price to pull back up into an area where an order imbalance
Order filled.
is at. Might be better to wait for that. Okay, looks like our markets are starting to roll back over. Okay. Yeah, Miss Chris, I'd be looking right on crude oil back up to for a short entry about 68.48, 68.60. We do have the crude oil report coming out in about 25 minutes. Let's go out to nat gas. Yeah, minimum retracement back up. Now, the difference between these two is one of these fair value gaps is inside of a leg base, and one of them is not. Okay. So continue with your observations and watching what's going on the price chart. Getting any momentum? No momentum, no consolidation yet. Looks like they're going to continue to put a little squeeze on the NASDAQ traders. Microsoft starting to pull back a little bit. Possibly a little profit taking. So monitor Microsoft and NVIDIA. Apple seems to be the odd one out at this point. Okay. And I'll do some research on which one is now the largest market cap on those. I got the area. I just had my stop in place, protect my account, but I didn't have an entry. So if you're still short the NQ and looking and taking aggressive, then we'll look at that 22,983 as that targeted range. Oh man, it's always when I'm not watching them. Nice move back down on the Russell. Russell got that unfilled opening gap. Now I've got to wait till price comes down to uh, the gap fill. Sell Mortimer. How about our Dow? We're gonna Dow. Look at that. A lot of examples that as I'm studying this, they're working beautifully, but you know, we allow so much extra noise into our trading environment, and sometimes, we talk ourselves out of a really nice entry. Man, that was a beautiful entry. All right, crude oil, gas, and we're still about 21 minutes away from the crude oil report. All right, let's take a walk through a couple of these other ones here. I'm just looking for some short-term trades. I need to make up a few bucks for my stop outs. So I'm just looking for price patterns. We got the micro Bitcoin. Let's come out. Let's look at wheat. And soy meal. Now, if live cattle is at all-time highs, the soy meal might start to play a part. Now, the farmers, cattle raisers have been doing pretty good with the low prices for feed. So they'll like the price going down, but we'll see how that plays out. Soybeans, price has broken the support. Corn, well, corn took out those levels, also breaking support. Bean oil, I missed earlier trade. There's another example of using that fair value gap. How about silver? Platinum. Yeah, we're watching copper. Haven't got an entry on copper yet. We do have an order pending. Looks like gold is getting a bounce, but it hasn't come back down to the entry yet. Ooh, Swiss franc. And we're gonna keep an eye on Japanese yen. Euro. I know it's kind of tough to get into trades right now with on the equity indexes. That's why I'm trying to distract myself. I mean, yeah, I want to pick a top. I want to get that top. I want to ride it back down. But, these are not the market conditions for trying to keep picking the tops. Okay. There's a squeeze going on for sure. Nice move off of on the Canadian dollar. Missed that one. I know it's a little frustrating. You're missing a lot of these trades because I want to be there when it trades out. I'm not just setting up the trade and forgetting about it. And still Aussie dollar, yeah, that got the overnight in the last couple of sessions, yeah. This one is still fresh. All right, still about 15 minutes, 14 minutes away from the crude oil report. And at this moment, I have no idea which direction it may go. I have a supply up there at 68.48, and I have a demand about that 67.57 area. It's like if you want that one, you're going to have to place the order out there ahead of time. Since we're just kind of watching on the simulated event right now, let's say 67.57. Stop loss, and we'll come down about 67.40. Since I keep missing them, I've got to change my approach as far as waiting for them. I'm going to have to place an order out there ahead of time. Now, make sure if you are placing orders out there ahead of time, okay, that you've taken the time to study what we're talking about here, okay, and have a protective stop loss. Size your position a little more on the smaller side, okay? In these areas, we tend to have some pretty longer running trends. So you can take a much smaller position size and still get a pretty decent outcome on it. Okay. We have potential trade up here, 3.238 and 250. So we got about what, 14 points at about $140 worth of risk. And use one contract, 3238. Stop loss. Okay. All right, so we are seeing a little bit of a lack of buying, okay? A little accumulation up here on the top, potentially a small topping pattern. But we're not getting any strong pullbacks on the stocks, okay? So it's going to have to be news or some political or some announcement that's going to cause us to accelerate to the downside or need some catalyst here. Okay. After all, this could be forming, you go out to a little higher time frame, a high tight base. Okay. Let's get that out of the way, that out of the way. Now, when you start to see, and I'm going to talk a little more about the fair value gap here. When you start to anticipate price changing direction, okay, got to let that candle complete first and foremost. Now, it just now completed, and you have that fair value gap area, okay. Now, if price goes all the way through it, then you're going to look for the one below, okay. But that will be your first signal that we're seeing potential turn. It's been a really fascinating study on that because it's not normally in a place, you know, these fair value gaps are not normally in a place you would expect price to turn. Okay. But there's a lot of things that go along with that. And I have watched some people that I respect trade. They come, yeah, let price retrace about 50% back into that candle. And then I could never figure out how or why they were doing it, but they were old floor trader type folks, and you know they were spot on accurate. But I couldn't find the mechanics to participate in that. Again, the application part of trading is the final part after you've studied it, documented it, and such. Okay, I've got that one. Is the other thing to keep in mind is that this is a pocket of points. Okay, we talk about pockets of points. Pocket of points below that 304 area, you see that the volume really lightens up. So this big green candle was not everybody buying, but a lack of selling. Okay. I have to anticipate there were some stops, but when you look at these big green expanded range candle, big green ones, big red ones, often it is a lack of orders at those spots more than a bunch of orders. Okay. So it's always important to understand that with the ICT concepts that they also factor in the volume at these price levels and look for these different voids. Okay. All right. How we doing on NQ? Did it break? Not yet. All right. Let's adjust up here. Yeah. So far, NVIDIA and Broadcom, even though you're looking at a 60-minute chart, it's forming a high tight base. Okay. You still need to see a couple of more bars going sideways for that. Meta as well, big expanded range candle. And here comes Alphabet coming around the far outside where Apple is slowly fading away. Apple and Tesla. The sweetheart stocks, not so sweet anymore. Let's see. Have we given away any of those eval accounts? Yeah, team? All right, let's do something. What what could we do? Um, well, let's give an eval account to anybody that did take the breakout and go long. How's that? First one, type in that they took the breakout and went long on the Nasdaq or the S&P on the breakout. Okay. If you're like myself and kind of waited, I don't deserve one. Yeah, sometimes it's hard for me to come up with these last minute little quiz questions here. All right, how about another question here? I'm trying to find something here. Yeah, let me know when we've passed all those out. And I do want to thank Elite Trader Funding for giving us these eval accounts. I mean, they don't have to do that, but make it does help a trader refine their trading plan. Okay. You may say, wow, if I just took $50,000 out of my own personal money, put it in the market, I could make this, I could make that. Okay. Been there, done that too. Okay. But then the reality, when you put your real money into the market, taking it away from like a home equity loan or something like that, um, and then the pressure's on when you take your first one or two losing trades, okay, and you start to fumble. So the extreme value of trading in a prop account is for you to refine your trading skills, pass their evaluation, and then start getting paid for those refined trading skills. Okay. So thank you again, Elite Trader Funding, for that and for the value account. Good. And if you can, Brian, Mr. B, saying, hey, screenshot your trade of the week. What trade of the week do you have? And post it in the chat, and you can win a eval account. Okay. Always like and subscribe. You know, we need to get those likes up there as well. Markets are trying to hold on. There we go. Let's see if we get the NQ coming through. Yeah, we're still looking right there, and that's about halfway back into that. Only three, Kevin. That's what the old owl says. I knew the answer to that. 3 minutes to the report. All right. We're starting to see, but look, check out that volume. Okay. We're seeing a lot of, prices starting to skip a little bit. Now, I do have a trade set up ahead of time on the crude oil report. I got an entry at 67.57 for the reaction. I think this one's a little further away, 68.48. Okay. Get the drum roll. 60-minute chart on the crude oil is in a demand zone, leg base. So a little deeper into that zone, um, which would take us right into the middle here, would be a nice entry. Oh, okay. We also need you to either we need an email so we can send the code to you. So if you've answered one of the questions and you want one of those $50,000 eval accounts, end of day drawdown, okay? Then please let us know and either post your email or send us an email at admin@themarketinstitution.com. Thanks, Mr. B. All right, kind of a nice little whipsaw. I also want to remind everybody, in about an hour, we'll start the Mastering the Charts recap and review, and I'll give a brief on the fair value gaps and some of that ICT concepts. It's going to be cool. It's going to open your eyes to seeing some other things that correlate very highly with our method and our approach. All right, how we doing on the NQ? Is it pulling back? All right, we're still looking for a price to come down. If you took it short, 22,983 target, and we're looking for a bounce out of that area as well. And that's right, basically going to be like old resistance becomes new support. Woo, there we go. Let's hang on for just a moment. I'm not going to take the trade long at this point. I'm going to wait a little bit lower, but I want to see if it's going to work. Yeah, it's wiping out a lot of those. You're seeing it's very thin volume through that, very, very thin. And price could start skipping down, even gapping lower. Wow, that is really thin volume. Yeah, we're going all the way back to where's the heavy volume at? Okay, so about 29,958. Yeah, it's actually below that area. All right. Anyways, I look forward to seeing you all in Mastering the Charts recap and review. Keep in mind, I will be off on Thursday, Friday, making a trek up to Washington State, and yeah, I look forward to seeing you all over in Mastering the Charts recap and review. Okay, come on, go in there, get a little bounce. It's thinking about, actually, there's a little one right there too. So yeah, it's right in that range. Okay, starting to see a little bounce off of that. And one more check on crude oil and that gas. Now we're just going to be waiting a little bit now. All right. I wish everybody a great trading day for the rest of the day. We'll see you bright and early next week on Monday. And if you're going to the Mastering the Charts recap and review, we'll see you in about an hour. Thanks, everybody. Bye now.